Hello, and welcome back to the Argyle CFO Summit. My name is Brittany Sullivan with Argyle, and it's great to have everyone joining us today. A couple of notes before I turn things over to our esteemed speaker. First, a quick reminder to stop by our sponsors' virtual booths at any time during today's event and for the following week. Our partners are committed to providing you with valuable content and a great overall experience. At any time during today's event, you can visit their virtual booths from the main agenda page, which include complimentary materials, information, and meet and greet opportunities. To ask questions throughout the session, simply type into the Q&A chat and we will address your questions at the end of the session. Now, without further delay, I would love to introduce Miguel Juarez, Senior Director of International Tax at Marriott International. We're excited to have Miguel with us for a keynote titled Navigating the 2025 Tax Landscape, US and Globally. Welcome, Miguel, and over to you.
Thank you so much, and good afternoon, everyone. It's a privilege to be here with you. So I'm so happy to participate in this summit. Thank you so much for all the team, all the efforts, and of course for the invitation. So I'm so happy for being with you this afternoon, just talking about something that I love, that is taxes, right? And technically, this is something really, really important for people like you, leadership of your companies, leader of finance, CFO, that is very important just to be ahead on all these changes that are happening here in United States and globally. Why? Because always I will say it's not necessary that you know everything, but at least you have the hands up, you have the bullet points, the most important things about these changes. So today we are going to talk about this 2025 that is going to be a amazing year for tax purposes for US and globally. The agenda for today is going to cover three topics. The first one is going to be, as I pointed out before, the US tax. As you know, a lot of changes of the name TCJA is going to happen in 2025, and that is very important for us to be on top. The second point that we are going to talk today is going to be the global minimum tax that is just happening globally, and this is something that in other places is named the 15% minimum tax that have to be covered by the multinationals. We will talk about that. And finally, we will talk about the digital tax, something that in this new particular era of the digital economy is very important. And guess what? The tax is something that is coming along with all these changes as well. So let's get started. So first, we are going to talk about the US changes in 2025. So it's very important just to understand that this happened in 2017 when the former President Trump started making changes in the law. So in 2017, we have a lot of changes for tax purposes here in US that we name TCJA. That is the acronym for the Tax Cut and Jobs Act. So, but what is happening is that the majority of those changes are gonna expire in 2025. That is the reason that this 2025 is gonna be critical for our country. So we will have the situation that we know that is coming the election. So we will have a new president that probably will reinforce these rules just issued in 2017, or vice versa, we will have something that is going to be against these rules. So that is going to happen. We don't know. We don't have the crystal ball, but it's something that is going to happen starting in 2024. And then we will have the Congress. As you know, all these tax laws, all these rules are managed by the Congress. So we need to understand how is going to be the Congress. So it's going to be divided. It's going to be majority of the Republicans or the Democratic Party. So we need to understand how it's going to work in the way that we can understand what is going to happen. But certainly, one way or another is going to be a lot of changes in 2025 that is going to affect 2025 and 2026, right? So I just presenting in front of you some kind of timeline of what is gonna happening, and as I mentioned before, 2025 is critical. It's important that we understand that a lot of changes are gonna happen. So, and that is gonna affect individuals like you and me when we make our tax returns, as well as the business, and in this case for the multinational that probably you are reporting working on. So we will have a lot of changes. So I create this particular summary of the big changes that is gonna happen and gonna start in 2025. Let's start with the left side. The left side, you can see those tax provisions that are gonna are gonna be changed in 2025. Let's say the first one that I'm pretty sure that you will be interested. So in 2017, so we decreased the rates of the individuals. That means that when you are employed, when you have this kind of ordinary income from an employer, you pay taxes according to tables, and the maximum of taxes used to be 37%. So guess what? Now it's gonna return and it's gonna be higher. It's gonna be 39.6, the higher level of taxes that have to be paid. So now the second big change for individuals. So normally we have a small business, maybe we have some kind of the second stream of revenue that could be some kind of small services, and individual used to have a deduction for this business that is just to be 20%, and that is going to happen to disappear. So that is a big change for individual. That means that you will not have this deduction anymore. And finally, for those that we have children, so we will have this change for 2000, and of course it's 2000 here as well, but it's going to decrease to 1000, so and probably will disappear. So what we want to know is when we have more information about these all these changes, because as I pointed out before, have to be just to established by the communication between the parties and the Congress. So we will know about this, but it seems like everything is gonna happen in this way. Other thing for a individual, so we have something that we name standard deductions. So that means that when you are filing tax return, you have we said an amount that have decreasing the taxable amount. Imagine for those that used to file the tax return for married filing jointly, used to be 24,000. Now it's going to be reduced to 13,000. That means that you will pay more taxes. So the same for the single filers and with the heads of household is going to reduce. So that is the reason that for individual is affecting our taxes. In bottom line, we will pay more taxes. So we will be very interesting to see how this is going to happen. So hopefully we will continue having these, I would say, these tax benefits, but we will see it in the coming year. And let's go to the right side for the corporation. So big changes for the corporation as well. So we have something that was introduced in 2017 that is named guilty, that basically is the revenue that the corporation are receiving from foreign subsidiaries or branches, and that the rate of this tax is gonna be just to increase from 10.5 to 13.125. Also, other thing that was being introduced in 2017 was the BIT, the minimum tax that we have in US. Also, the rate is gonna be increased 2.5 points. And finally, something that is named FEDI, that is the credit for intangible income outside of the United States, is going to increase as well. So that is not bad because you will have credits, but at the end, the point here is not just to give you the message that the rates are going to change. It's to let you know that a lot of changes for taxes are coming in US, and it's very, very important that we can be on top. Of course, you as a leadership of your company, you as a finance leaders, you probably will have a team of tax people in your team, or maybe you will have a third-party advisor that you can just to ask these kind of things and let them know that you are very interested for having this in the first morning of Monday when they receive the communication from the Congress. It's very important that you can be on top of these changes. Again, 2025 and 2026 is going to be critical and amazing changes for taxes in US. Let's go now going to globally, right? So because we know that probably your business is not just a domestic, you have an operation all around the world. We have something that is named global minimum tax. And let's start just explaining what exactly is this global minimum tax. So it's worth to mention that these international tax rules have been in around the world for many, many years, more than 100 years working with the same international tax rules, where we're talking about physical present and source income. Normally, for taxes, this is something that we handle day to day, these two rules, the physical present and the source of income. The resident rule or physical present is technically that you will pay taxes when you are living in one place, you have business in one place, you have an office in one place, or because of the fact that you're not you just born there, your citizenship is from that country. In this case, if you just to be a U.S. citizen, you have to pay taxes in U.S. for all these kind of incomes that you generate around the world. It doesn't matter because you are a U.S. citizen, you have to pay for all of them. The second rule is just to be the source rule. What does mean is that where the income is generated. In some places, like in Latin America, Honduras, in Europe, Turkey, maybe UK, there are places that you only pay taxes where you generate the income. And we, in tax, we name this source rule. And what I am telling you this is because these used to be the basis for the international tax, the resident rule, the source rule. But what happened with the e-commerce, with the digital and globalization era, everything changed. You know, a lot of companies, most of them U.S. multinational, just sit down in California. I don't want to say the names, but those are intangible companies. They don't have office, so I mean, they are making business all around the world, but not necessarily they have to have a building there for making business. Everything is in the cloud. Everything is electronically. So that changed, and that changed the rules for taxes as well. So what happened is that many times you hear that these multinationals, big companies like the one that provide the smartphone, or the one that you can buy a lot of things on the website, and they say that they don't pay taxes. Why? Is because they say, okay, so I will not have to pay taxes because I don't have physical presence. I don't have an office, in, let's say, in Brazil. I don't have office in Spain. I don't have a physical office. But nowadays they say, okay, hold on one second. We are changing the rule because that is unfair. That doesn't mean that if you don't have a place for working, you don't have to pay taxes. You really have to pay taxes. And this is the global minimum tax. The intention is just to having the companies, multinationals, paying taxes where they are doing business. There is a technical things like top-up taxes, qualified domestic top-up tax rules, that basically is the formula, the economics for this rule. But what I want that you learn about this is that basically we have over here a new rules that, of course, you are not gonna take care of them. It's gonna be your tax team or maybe your advisor. But it's very important that you understand that this is something that is happening, and it's gonna happen globally. So, as I pointed out, the scope of this is gonna happen the big companies, something that we need the multinational enterprise for revenues for more than 750 million of US dollar in a fiscal year, so euros in a fiscal year. That is more or less about 804 million of US dollars in a fiscal year. You can imagine, okay, maybe you are talking about big companies. Maybe the company that I am working for will not be affected for this process. Well, at the very beginning, no, the answer is not going to be affected. But the idea for the global tax, the minimum tax, is to be implemented in the following years, 2025, 26, 27, and decrease the scope. That means that the sooner or later, all the multinational, all the time that you are making business all around the world, you have to pay minimum tax. And you will say, but Miguel, why you are talking about minimum tax? All the time we pay here in United States 25% of taxes. That is not something that is minimum. Yeah, but you have places that is named tax haven that you don't have to pay taxes. You have places where the the effective tax rate is 1%, 2%, 5%. So in those countries where you don't pay too much taxes, is the places that you have to top up the tax and have a minimum of 15% of taxes. Why 15% of minimum taxes? The gurus of the international rules say that the fair amount for making paying taxes all around the world should be 15. So, but guess what? There are other places that you are paying more and more taxes. Like in Argentina, you pay 31% of taxes. Like in Ecuador, you pay 35% of taxes. So there are a lot of places where you are paying more and more taxes. So this will affect for those companies that are making operation in tax haven and the places where the taxes are minimum. So there's something that we name safe harbors. What is safe harbors is that some kind of rules that help the taxpayers not paying taxes. And basically that is gonna be that when you, as I pointed out, if you are paying more than 15% of taxes, probably you don't have to make any kind of calculation. So you have all other kind of reliefs that is gonna be a certainty in the case of the kind of operation that you are doing. Again, the intention is not that you memorize all these kind of things, but you understand that there will be some possibilities that your company have not to pay taxes because these safe harbors of tax benefits. So finally, for this part, the timeline is gonna be very important and critical that you understand that, as I mentioned before, this is something that I cannot say is new. Starting in 2015, where a lot of countries, imagine 140 countries, sit down and start working on this project, and they start working. And okay, we notice that there are places where you don't pay taxes, other places that we pay a lot, and so back and forth communication. So we are in 2024 where we can see that now is implemented this pillar two or global minimum tax in Europe, and it is coming to United States. In United States is some kind of political, is something that is going to be discussed in the Congress as well, but the idea is that US enforce the global minimum tax as well. And personally, I believe that US will join this in 2006, 26, 27. But the point here is that it's now there. It's now in Europe, it's in Asia Pacific, it's in Latin America, and it's coming to US. It's something that you have to keep in mind that is a trending, and it's something that will affect your company sooner or later. All right, so finally, let's talk about the digital tax, digital economy. We, as I pointed out before, this digital economy changed everything. So now the multinational corporation don't have a physical presence. They don't have buildings in countries. They have everything in the cloud. But sometimes these ones just to have a operation tax free, right? And that initiative that is, as I mentioned before, is just to having some kind of fair rules for tax purposes, and that is the reason that the international teams create the digital service tax. The digital service tax is just to try to tax in all the digital tax, all these kind of downloads that you have. I put in some kind of digital service example that are covered by the digital tax: intermediation between the third parties, online clubs, remote teaching test, exercise, telecommunication, intra-group services, products and services that normally you do in the cloud, but you don't do it physically. All this kind of e-commerce is gonna be start paying digital service taxes, because it seems like for the government you are generated income in the cloud. Of course, it's not territory, but at the end you are making the final benefits on that country where is located the consumer. This is very important for this. Where is located the consumer? So this digital tax is all around the world. We have a lot of digital taxes, and what is happening is that it's affecting a lot of multinationals based in United States, because we have a lot of technical, a lot of big companies here in United States, and that is the reason that we want to be on top of this, because so we are ahead of the technology and these kind of things. But around the world, they are try to taxing these kind of services that we normally do pretty well here in United States. So Europe is one of them that they are creating these digital service taxes in Europe. They say, okay, if you this company that I know that we have this kind of good deals yesterday and the day before. So if you are making business, e-commerce business in Europe, now you have to pay taxes. You have to pay 3% of taxes, the kind of sale tax, if we can just to try to compare with the United States. Or you have to pay 5% in Italy. So this kind of sale tax that is named digital service tax have to be paid in Europe, have to be paid in places in Latam like Mexico, Brazil, Colombia, Uruguay, Peru. So around the world, we are having this digital service tax that have been enacted. So we have also in Asia Pacific a lot of initiative for having these digital taxes. So the bottom line here in the digital tax is that a lot of government are started just to tackling these kind of services in some places. And I know that I cannot make any commercial, but for instance, in Uruguay and in Mexico, they name Netflix a tax. Why? Because these kind of companies, the streaming and these kind of things, start paying this VAT there. Could be similar to the sale tax. So they are paying this tax that used to don't pay, because they say, well, I don't have a physical presence in Mexico or in Uruguay, so why I have to pay taxes? It's just streaming. But these kind of operations now are considered for the scope of taxes, and the name is the service tax, digital service tax. Okay, so let's make a summary, because I know that we will have about 5 minutes for Q&A. So let's talk about the summary of the topics that we talked today. So first, as I pointed out, for US, it's very important that you be on top of these new changes that is going to happen 2025 2026, that is going to, honestly, if happen, is gonna decrease our benefits that we have from the taxes. So let's see what happens. It's some kind of political issue as well, but let's say what happened. Please be on top of these changes. It's critical for the organization to stay ahead of all the changes for taxes, for the global minimum tax, for the digital taxes, because it's happening. It's not a theory. Now it's happening. There are places in Europe, in Asia Pacific, in Latin America, that is a fact. It's not kind of, well, it's gonna happen, probably. No, no, no. It's something that is gonna happen, and it's happening now. And finally, please understand that this is as a regular new rules. at the very beginning we will have some kind of questions. So, okay, what is going to happen? How are going to be calculated? That doesn't mean that you, as a leader of your company, have to understand or memorize the formula. No, the point here is that you, as a leader, have to understand that is happening and put your team inside of your company or engage a third party outside of the company to take care of this compliance that is very important for US and international. So I think I will finish with this. And of course, as always, it's a pleasure talking about taxes. Again, my only advice is just to be on top. You don't have to take care of the formulas. You have to take care about what is coming, just to understand what is happening. Okay. Thank you, and I will pass it on to our team. Okay.
Great. Well, thank you so much, Miguel, for such an insightful keynote. As a reminder, audience members can still enter questions, and we'll go ahead and review a few that came through. This first question, Miguel, how has TCJA evolved since its implementation, and what are the anticipated impacts on business and individuals, especially as we move into 2025?
Yep. So in fact, we already been affected. A lot of multinationals based in the United States have to make calculation at the end of 2023 in the way that they can restructure the business and don't having this huge impact at the end of 2023. Is something that happened now. And what happened is that you try just to change your structure in the way that you make the minimum effect for tax purposes. Why? Because in 2024, it's already taking place in places like Poland, like UK, like Italy, like Spain. So they already, actually, Switzerland and Luxembourg, they are already taking care of the Pillar 2. So my point here is that it's already affecting. In 2023, we have to make a lot of movement, and so on. At the end of 2024, we have to understand if we need to make a variation in our structure in the way that we cannot be affected for 2025. Okay.
Great. Thank you, Miguel. This next question regarding the global minimum tax framework that is gaining traction, how should multinational corporations strategize their international tax planning?
Right. It's a really good question. So we, as a normal tax strategy, you have to have a plan, right? A business plan. In this case, it depends of the resources that you have. Probably you will have internal resources that can help just to have this plan from the beginning to the end. I'm saying that with a step plan 1, 2, and 3, and just to analyze it, all the operation that we have. But to be quite honest with you, there are some companies that you don't have the capacity for doing that. So then you have to engage a third party, a firm, an accounting firm, a tax firm that help you just to go in hand to hand to these changes. But it's very important, critical, that you understand if you have internal resources for working on that and making the plan, or working with a third party that can help you just to elaborate more. And you have to have a plan. This is the way that you have to implement this. Looks easy, but honestly, it's not that easy.
Great. And I know you've touched on this, but what are the key challenges and opportunities that are presented by the digital tax revolution? Like maybe just the key ones.
Yeah, so we know that we are making business in e-commerce. We love that. Honestly, just making now this presentation online is something really nice, right? So it's something that you can be communicated. It's a lot of things, but the point here is that you have in your mind to understand that every single e-operation, electronic operation, could be taxed. So it depends of the country. So in your mind, you have to understand that when you are making this business model, the way that you don't have any more office there, that doesn't mean that you don't have to pay taxes. Nowadays, if you are making a e-business, you have to include the taxes as well in the operation, because probably you will have to pay taxes. It's something that is affecting, and it's something good. It's something that is changing everything, but the majority of those operations probably will pay taxes.
Excellent. Looks
Okay.
like we have time for at least a couple more questions. So, this next
Yep.
one, in what ways are countries around the world adjusting their tax policies to accommodate global economic shifts?
Yeah, pretty nice question. So now it's gonna be a battle of the countries because can you imagine, let's say, Nevis that is a tax haven, or maybe Barbados that used to have 5% of corporate taxes. Now they are thinking, so for me, it's gonna be now important to increase the level of taxes because there is no advantage for having no taxes or minimum tax 5% in my country. So I had to increase the level of corporate taxes, the rate that I am using for these kind of items. In the other hand, places where you are normally making taxes for 35%, 30%, actually US 21% is high. So there is gonna be this battle between the rates. So you have to be attractive for the consumer, in this case for the taxpayer, just to making business in your country. So it's gonna be this internal bad battle, this natural battle about decreasing the level of taxes or increasing if you don't have it in the way that you attractive the people, the enterprises for making business in your country. Uh,
Great. Well, thank you so much, Miguel. That is all the time we do have for questions, but we will be happy to share with you anything we did not get to. So, thank you so much again for such an incredible keynote. I also want to thank everyone else for joining us today. This session, along with all of today's content, will be made available on demand following the event. Our next session will begin shortly at 2:40 Eastern, which will be a panel titled Talent Development for Finance, Build and Retain the Best Team. Please click on the join button that will appear on your screen to be redirected, and we look forward to seeing you there. Thank you again, Miguel.
Thank you so much.